Hello everybody, it's Norman Green, aka Argentus Maximus, with Rhythm and Price number 169, dated the 28th of July 2014, and welcome also to the members of Thirdland TF Metals Report website, who are guests for today. Now today's Rhythm and Price is going out on the Argentus Maximus blog, so it will hit a wider audience, and we're going to look at a single cycle or a sort of pair of cycles in silver. So let's see what we can come up with. Now there's spot silver on the weekly chart for the last since 2010, and I've marked a cycle or an apparent cycle with the highs on the green bars, so it will be high, and the lows on the red bars, so it will be from low to high to low to high to low to high to presumably a low. Now the swings on this cycle have been absolutely huge back in this area here, but that's not necessarily because of this particular cycle, because if you see, you can actually see there's a kind of like a waveform in silver which encompasses several waves of this cycle, and I'm not dealing with that today, and I'm also not dealing with the smaller little marks, smaller subcycles. I'm restricting myself to in my comments to the ones that we see marked here. Now there is an interesting characteristic with this one, which it seems to have a double top followed by a bottom. So what I'm going to do here, I'm going to put another little cycle mark on this. Let's see if we can put it on there and bring it over to about there, somewhere like that. And let's make that one green also. And now it is apparent that we have a top followed by another top followed by a low, and then a top and a second top and a low. So there's a kind of, it's not a regular shape this. You could say that it's in there twice, two highs. It might even say that there are two lows. You know, I mean, is that a low there, or is that a low there, or is that two lows on either side of the red line? But either way, the point is that there appears to be a double high followed by a bottom. And the time difference between these is about 75 weeks. So I looked at it and I laid on this trend line, and the trend line more or less tries to delineate what the thing is swinging about. So there is a swing down below the trend line, followed by, when you hit the greens, there is a swing above the trend line, and then it dips below the trend line for the red, and as we come to the greens it's going back above the trend line. So obviously this is of great interest, because while there is huge support for silver in this area, and it has bounced off that area 3 times, under this particular cycle the implications are that the weakest period, the weakest expected time, it has not yet arrived, and the lowest low should presumably come at or about the time of the next red, which in this idealized chart, which is end of October 2014. So I put a statistical search on to see what cycles come up, and does a spectral or Fourier algorithm detect this cycle. Let's have a look now. Okay, so the software ran and did a search, and it came up with a whole bundle of cycles, or things that it thinks are cycles. But in particular, it came up with these two, 73.66 weeks and 77.54 weeks, which are nicely bracketing the idealized 75 weeks that I had worked out by eye on the chart that you just saw. So plotting these guys on the screen, what do they look like? And the answer is, here we go. Now let me just check that that's the two of them, or I'll show you them separately maybe. That's the 73 week, which times the high perfectly, times that high pretty close. And it seems to have lost its high in this area. You could say that that high there is truncated, in the sense that if the market had been going sideways, you might have expected it to swing up. But they are still 25% swings in the price of silver. So the question is, why did it go flat here, and also when is the next low due? Okay, well that date there is the 27th of October to the 3rd of November, it's just visible outside the chart. So Q4 2014 for that one. Now let's have a look at the other one. Now the computer has plotted this, and you can see the high comes in a little bit later than there, but it's probably a better fit on these two on some sort of weighted center, and it's a little bit later here. And we're looking at January 2015 in the case of the low of this one. Now I can combine those with this result, and it shows the mid to end of December 2014 as it being its idealized low. Now that's the computer, but we've already noticed that these cycles are not beautiful sine waves. They're more fragmented with the double top and the bottom. So I think I'll go back to the chart now and see what else can be got from that. And here it is. Now for clarity's sake I'm going to remove the second tops. So once again it's showing the high and the low and the high and the low. And on this particular chart, that low, which was estimated as being December or January by the software, looks like being a little bit nearer. It's as early as the late in October or early November here. But it's interesting to see that while the low came in on the red line there, and it came in on the red line there, it came in a little bit after the red line here. Or you could say there was a low on both sides of it. So you could say any time between the start of October and maybe the end of November, if it had the same relationship as it had last time. So you can see where we're not that far from the conclusions of the software. Now I ran a harmonic analysis on this cycle, because this cycle behaves as if it's a whole bunch of smaller cycles all together with the multiple tops and bottoms on it. And I came up with a very interesting shape for it. Let's have a look at that now. And there we go. Now this is interesting because the double top affair can be quite clearly seen here, and can also seen here. Also the fact that the cycle evolves and changes can be seen. But the harmonic caught the second high a little bit early in this case. So there's a bit of variation. Anyway, if I zoom in, let's have a closer look. We can see that there's an expectation of multiple lows also. So there's an early low and a later low. How did it work out the previous time? There's the early low, there's the later low. In this case the earlier low is much higher, presumably because of the downtrend of some bigger force in the market. So the harmonic analysis is giving us, now this is limited to this cycle only, or these two cycles, and all other movements in the market have been filtered out. So as I say, all these swings of about 25%, which are suppressed recently, like they were back there, but they won't stay suppressed for forever. They're removed in the sense that if they don't belong on this, then one of these vertical lines, they're not going to show up very much here. But the low that's giving us there is the third week of October, with the secondary possibility coming in 5th of December to mid-December, which is not that far from what the computer algorithm said. Now I can actually draw in some more detail, so I'm going to bring that in now. Let's see what we can do here. That seems to be about as much as it can get. And now you can see the strongest peak on the green line, with the secondary peaks coming in, and they were very strong there. possibility of a last rally before we move down into the red area, but the reds can start producing lows from here through to about here. So it's in the area now where the next rally is predicted, but maybe should not be counted on, because the downside should increase. So the prognosis from this would seem to be that although silver has been going sideways, and although there is a large down wave which is coming towards an end, it should not be considered to have actually reached its end until we get past this period of October, November, earlier December 2014. Now in that vein, I'd like to show you something else. This is the promotional website for the Metals and Minerals Investment Conference, which used to be called the Hard Assets Investment Conference, and this is for the San Francisco conference, which was due to come in November or December this year. And we have a note here: the current challenged metals market has led us to make the difficult decision to suspend our events in the best interest. So that conference is cancelled. Now there is another one which they run, which is on the New York conference. It's the Metals and Minerals of New York version, which was due at the same period, and this one is also cancelled. So it would appear that the organisers of the Hard Asset or the Metals and Minerals Conference have suffered from a lack of interest from the investment public and have made their decision to pull the conference, which just happens to be scheduled pretty much at the exact same time as the anticipated low for the cycle we have just been analysing. And that's quite interesting, because it could be that what we're looking at here is a confirmation that sentiment looking forward 2 months from now is very low indeed among metals investors. And of course that would be exactly what I would be looking to see if I was proposing that the market could be making a major bottom at that stage. Now all it remains to see, of course, is to allow the market to walk forward into this period and observe how it pans out. Well, thanks very much, and take care, and I'll speak to you all again. Goodbye now.